Are you a home buyer that is lost and confused about tax benefits for buying a home? By the end of this video, you are going to have expert knowledge that will make you feel so much more confident when applying home buying tax deductions. But before we get started, you guys, are you looking to get started in real estate investing? Be sure to hit that subscribe button and click the bell to get notified of our videos every other Monday. I'm Janessa with Frontier Designs, and my company is your resource for expert real estate investing strategies. Okay, I have been investing in real estate for the past 4 years. I think for anyone that has purchased a home, or just anybody in general, tax time can be extremely stressful. We try to do our own research and then just end up getting more confused and overwhelmed than before. But this video will kill the overwhelm and will make you so much more confident during tax time. Okay, friends, before we get started, I just want to say a few things. I'm getting all of my information from the IRS publications of 530 and 527. You can find these on the IRS website, but I have linked them down below. My goal is to put the key points of those publications into English for you today. Second, I am not an accountant, but I did go to school for accounting and business, and I have been in the business of real estate investing for the past 4 years, and then I was an accounting assistant for 8 years prior to that. So I have a clear understanding of what I am talking about, but be sure to ask your accountant to see if you are making the right decisions. Okay, so now with all of the fun disclaimers out of the way, let's get started on the tax benefits of owning a home. Okay, so first off, I'm going to make this so dang easy for all of you guys out there who bought a house and have a normal W-2 job. You have two options when it comes to doing your taxes. You can either choose the standard deduction or you can itemize your taxes. The standard deduction is a lump sum of money that you can use to lower your tax bill. But if you choose the standard deduction, you cannot itemize your taxable income as well. It is one or the other. Meaning, if you choose the standard deduction, you will not be able to also itemize out your property taxes, home mortgage interest, and mortgage insurance premiums. So I'm just going to kind of break down the standard deductions amount. The standard deduction for filing single is $12,200. The standard deduction for filing married is $24,400. The standard deduction for married filing single is $12,200, and for the head of household, it is $18,350. So the one thing you have to ask yourself is, are my itemized deductions greater than the standard deduction? A great place to calculate this question is on Form 1040. But just keep in mind that most people will not exceed the amount of the standard deduction by itemizing. So if you have a W-2 job, I would highly recommend just sticking with the standard deduction. If you do file under like a sole proprietorship, or you have a lot of assets, or itemizing is just your best decision, then definitely choose to itemize. So we're going to talk about exactly what you can itemize on your taxes. If itemizing your taxes is the best route to go, then here is what you can itemize from your taxes. You can itemize state and local real estate taxes. These are property taxes that you pay to your state or local government by owning a home. Normally these amounts are calculated by the tax assessor's office, and you pay them twice a year. Home lenders make it really easy these days because they will just wrap these costs into your home loan. Now, here's something to watch out for. You can only deduct what you have paid for in that current year. So let's say, for example, 2019. You cannot go back in time and include 28 taxes you did not pay. Also, let's say your second payment was due in October, but you missed the deadline and paid on January 1st, 2020. You would not be able to deduct that amount in the 2019 taxes. It has to be paid in 2019. You can also deduct your home mortgage interest. When you purchase a home, your payments consist of principal and interest. The interest portion of the loan is what you're able to deduct. The IRS does have some restrictions on the amount you can deduct for interest. So please be sure to reference publication 530 for the specifications of that. But your mortgage interest is the second thing you can deduct. The third item you can deduct is your mortgage insurance premiums. A mortgage insurance premium is just a payment you have to make if you purchase a home with less than 20% down. Did you use the first-time homebuyer's credit? Then you would qualify for this deductions. If you purchase your home through a VA loan, Federal Housing Authority loan, which is FHA, or the Rural Housing Administration, then you may be paying a mortgage insurance premium that you can deduct. If you pay for your home through a conventional loan with a down payment higher than 20%, then this is not applicable to you. Okay, now that we have all the nitty-gritty standard deduction and itemized deductions, I am going to talk to you guys about owning a second home and rental properties. But before I go on, be sure to comment down below and let me know which tidbit of information was most helpful to you. Okay, you guys, second homes. The IRS defines a second home as another property you own that you live in throughout a portion of the year. You can deduct everything that we have just talked about, but the IRS does have a limit for deducting property taxes up to $10,000 per year. I know you might be thinking right now, oh wow, I can get a home on a lake and rent it out and deduct my property tax, mortgage interest, and the mortgage insurance premium and all of that fun stuff. Not so fast. If you rent a home out for 14 days or less, then you can take advantage of those tax deductions. If you rent it out for more than 14 days, it is considered a rental property. Just wanted to make everybody aware of the IRS tax rules when it comes to owning a second home. And it is up to you to decide if renting that property out is the best option for you and your taxes. So just letting you all know, second homes are great. I'm not saying anything against them. There's just specific IRS rules on what defines a second home and what defines a rental property. Now we're going to dive in to those of us who like to build passive income with the use of real estate. At the moment, I'm just going to be talking about residential rental properties, which means a fourplex or less, and I am referring to publication 527 for these rules, and I have linked them all down below. Okay, so when you own a rental property, everything I have talked about in this video goes right out the window. Honestly, now you are treating this property as a business expense, and there are a whole slew of expenses that you can deduct. Some of these include advertising, cleaning, maintenance, depreciation, insurance, legal and professional fees, management fees, repairs, and more. There's a very, very long list, so I advise that you go look at publication 527 to see what you can deduct. So if you do own rental properties, I would highly suggest that you keep track of all of your expenses closely so you can deduct them at the end of the year. Also, one tactic that many investors use is to live in the property for a year and then move out. You can certainly do this, but I highly advise that you keep track and keep records of when you move out of that property, because once you move out of it and it is rented out, then the tax laws change on it. So I just want you to be aware of that so you can make sure that you're keeping up with the applicable tax rules. Now, I know I have covered a ton of information, but I have created a simple tip sheet that will summarize the information I have provided in this video. Just go to www.frontier-designs/blog and you can download the tip sheet for you to save for future use. If you'd like to learn more about real estate investing or house flipping, be sure to hit that subscribe button and hit the bell to get notified of all of my future videos. You can also check us out over on Facebook and Instagram to get updated on my current house flip and to learn more about my company. I will see all of you guys in my next video. Bye!